And then lastly, we want to talk about taking profits, knowing when to take. So again, we talked about, of course, this is the goal to sell it up here, but we don't know if it's going to get up there perfectly. And we're going to go over an example in a trade in QSR we took recently and how we try to systematically take profits on a consistent basis. So with this QSR, again, we talked about support and resistance before. We can see that this name had some support in the 64 area. It had broken down, and we'd start to see a little base forming here where we wanted to buy up off support, a support buyback setup versus the current low. So we took this trade up through 62. Our stop was 60. We were risking $2. And as the name started to break out back within its range, this was resistance up here, the 68 area. Our goal was to buy up off of support. Again, the key thing is we're not trying to buy it here. We're not trying to buy it on the way down. We're not trying to catch the low. We want the low to be put in. We want to see some trading happen within that low and then find that support buyback. We found that through that 62 area. This is when we got involved. We placed our stop below the low, so we're risking $2. And as this name starts to drift higher and starts to break out, this is our ideal target, is a retest of this prior high. Now, as the name starts to break out, and let me get an arrow. Okay. So as the name starts to break out, these couple of days, we can move this stop up a little bit. And we can move it, this day where it's trading above 62 and 63. We can raise that stop from the original 60 area up to 61, where the trade is now showing us that we are in some way right. The stock has been trading higher for a couple of days, but hasn't really done much. This was the key day when we were able to finally move this risk to break even. So the main thing is when you're in these winners, of course, this is our goal. This is the goal of the selling with retest, but we don't know these days if that is going to be the end result. What we do know is that we were risking $2, and now that we're only risking $1, that's the one thing that we can try to control a little bit better in defining when to get out, if and when we're wrong. The upside will always take care of itself, but as long as we can manage the downside and limit as much as we can, it will keep you in, this business much longer than it would if you don't focus on that. The key part here was this day, this very bullish engulfing day. This was the time where it now made sense to raise this stop to break even. So now we got, we're $2 above our price. We're 1-to-1 on our real risk initially in the trade, but we've now brought our risk down to 0 while holding on to what is a winning trade at the moment. It continues higher, nothing really to do just yet. We catch this gap up, and this is where, again, we're getting very close to where our target is. Our target's the 68 area. It gaps up, it trades nearly to it. This is now where we raise that stop again. And the ideal thing with how we raise our stops, we aim to raise them later in the afternoon, typically anytime after lunch. You want to get the most of the day's trading, ahead of you or through the day, and you'll see this action. By the end of the day, the stock looked, closing looking phenomenal, but off the open, it can be very hard to anticipate what is going to go on for that day. So once we raise the stop to here, under 66, now if it wants to trade higher, that's amazing. If it doesn't, now we'll make $3 on the trade if it fails. So this is where we raise the stop, and then it couldn't get up to this, our ideal target, starts to roll over. Not the end of the world. We took the profits and we made $3 on $2 risk, but we were able to continuously limit that risk as the trade progressed in our favor. And that's one of the most important things when it comes to taking profits, is having a systematic approach in the ways you can limit your risk. And that's the most important part, is finding the entry is important, defining a risk is important, but keeping the winner by raising those stops systematically will keep you in them much, much longer than trying to catch a top or say it's going to, trade to here. If it doesn't go here, I'm not going to sell it. You have to be very open to what the price action is showing you. And that's what this showed us. It made sense to take profits here versus trying to be greedy and get the extra 40 or 50 cents of what the ideal target was. So that's kind of a quick little summary of this book. Again, we have a couple funny stories in here that go over this in a little more detail that we'd highly recommend reading. We have some stories, about why we avoid earnings, but again, we went over a lot of the major topics in here. And if you, like for Cole, if you've, watched through this, you get to the end and you're able to explain, what is support, what is resistance, show an example of that, explain how you're going to systematically grow your investment accounts, how much you plan to save weekly and what you should get to based off that plan, and explain what an A+ setup is to you. We have no problem moving up to step 3. So we hope you guys enjoyed this, and we hope we see you next week when we review book 3, step 3 in the program, which is a Dumb Money book, which we're going to go over all the costly mistakes that a lot of new traders make that we want to help you avoid by reading through that book and going through this class next Monday at 5 o'clock. All right, guys. So Cole, while we're here, do you have any questions that we can help answer for you?
Not really. That was a good lesson though. I mean, I'm not typically really that new to some of this stuff, but I'm definitely taking some of this stuff that I haven't before.
Okay.
Yeah, it's definitely a lot of the basics, right? It's coming into step 1, step 2 is going to be a lot more of the basic stuff, and then as you move up into the next parts, you're going to see some more complicated things. I think that the A+ setup is a question that you need to consistently be asking yourself all the time, because you're gonna, as you get through more and more charts and more setups and take more and more trades, you'll be able to really dissect those criteria and that specific characteristics of a chart that you want to see. So over time, that A+ setup, the list of stuff is gonna extend. So
All right.
All right, guys. Well, again, Cole, thanks for stopping in, and we'll see you guys next Monday.
See ya.
Yep. See ya.